to Real Talk, Indiana's premier talk show on real estate investing, where we talk each week about investing your money right here in Central Indiana. The tips, tricks, do's, and don'ts, brought to you by CIREIA, Central Indiana's oldest and largest real estate investing association. Hello there. My name is Vicki Perry, and I'm the Executive Director of CIREIA. We have over 600 members, all active in or learning how to be active in real estate here in the Indiana market. This radio show is available on FM 95.9, AM 950, podcast on YouTube, and www.cireia.org. Join us each week as we talk about how you can make your money more active with better returns and help the community that you live in with real estate done the right way. Now, on with the show.
Hello there. Welcome to Real Talk, Real Estate Investing the Right Way. My name is Brett Snodgrass, and I'm one of the affiliate partners with Central Indiana Real Estate Investors Association, and I'm filling in for Ron Watson, the board president, today. We're the largest and oldest nonprofit real estate investment group in the state, and our goal is to help you understand what the opportunities are for you, whether you have a lot of time to invest, minimal time, lots of funds, or no funds at all. Last week, we talked with Elizabeth Sickles. She is a local Airbnb investor, and she's a coach as well as an instructor for our short-term rentals subgroup. If you missed that episode, you can watch it on CIREIA channel or YouTube, or tune into it on the website at www.cireia.org. That is CIREIA.org on the calendar of events. Joining me today is my co-host, and he's going to be answering some questions as well. The most sought-after rehabber in Central Indiana, and he is also a co-owner of the Perfect Launch Mentoring and coach extraordinaire, Dave Short.
It's great to be here. I'm looking forward to this section on notes.
Definitely, Dave. Good to have you, man. And also joining us, we are asking Greg Peterson. And if you haven't heard of Greg, he's going to be answering questions on notes, how to buy notes. And he is a mortgage note investor, private lender, and he's also the other co-owner of Perfect Launch Mentoring. Welcome to the show, Greg.
Very great to be here. Thanks for having me.
Definitely. Well, Greg, we're going to start with you, and let's talk about your story a little bit. You are investing in notes now. Have you always been doing that? Did you start out somewhere else? Tell us that.
Actually, I started out investing when I was 8 years old in government bonds, and from that point on, did it weekly. Eventually got into stocks, got a degree from IU in finance. I was just wired this way, and I've traded stocks, options, commodities, dealt in real estate in one form or another for probably the better part of 20 years. Have really shifted my portfolio now pretty extensively into real estate. Still have some stock transactions, but when I look at the whole thing, I just see tremendous opportunities. And I see so many different opportunities all within the real estate environment. So I love the space.
Great.
Definitely. Well, let's talk about that a little bit. You decided to invest in notes. Mm-hmm. Can you tell our audience, what is a note?
Okay, a note, when you bought your house, everybody thought they got a mortgage, and you did. There was a big pile of paper. But somewhere in there was a paper that said it was a note. It's probably 3 or 4 pages long, and it was your promise to pay. It's actually the key part of what you did when you bought your house or any house. The mortgage is the securitized instrument. That means that it's the way that the bank can come after you and collect. So it's about 18, 20, 25 pages long. It's the big document. And it basically says, if you don't pay, we'll foreclose. If you're late, we'll charge you these penalties. If you do this, we're going to do that. And you sign off on that to begin with. It makes it easier to come after you. That may sound cold, but that's what it is. So when we buy a note, we're buying the note and the mortgage, or the note and the deed and trust, depending on the state, because I buy them all over the country. And then along with that, there should be a pile of other documents. There's allonges, assignments. Those track the transfer of ownership, because if you've ever gotten a mortgage, sometimes before you've started your car in the parking lot, they've sold your mortgage, right? So you've got that hello, goodbye letter. Every time that happens, there is 2 documents generated at least. One's called an allonge, one's called an assignment, and it's tracking the ownership of the note and the ownership of the securitized instrument, which are one and the same, but they are 2 separate documents. In other words, one's at the county's recorder's office, that's your mortgage, and the note is never recorded. So hence we have 2 different documents to track ownership of those. And then there's a whole bunch of other stuff, pay histories and so on. But we simplify it by saying we're buying a note. But a note entails a whole lot of other stuff.
If I borrow amount of money from Chase Bank and I don't want them to sell my mortgage to somebody else to make payments, do I have any say in that?
You have 0 say. If I buy your mortgage, you have no control over who buys your mortgage. And it really doesn't matter. When you acquire a mortgage or they sell a mortgage, it's a baked pie. It is what it is. So I can't acquire your mortgage and change it. I can if you quit performing. I tend to buy performing notes where people are making a payment on a regular basis. So long as they're doing what they signed off to do, that's what I'm purchasing, and I can't do anything. I can't change your interest rate. I can't buy it and suddenly bump you up 3%. I mean, that there's, for obvious reasons, you can't do that kind of thing. What I can do is if I own the note and you're having trouble, and you can't perform now, then we can do what they call a modification, or there's several remedies. At that point, we can then start saying what's going to work for you, and once again, that the owner of the home has to sign off on what we're trying to do to help them out, and then we've modified the note, is what we call it, a note modification, and now those rules apply, and that could be sold down the road.
If I'm an investor, why do I want to buy a note or a mortgage instead of a house? I can touch and feel the house. I can't touch and feel a note.
Well, I'll tell you what. It's all depends on your philosophy. As I sit here in this room, having said I love real estate, I currently own no houses other than the one that I live in. Okay? But I own a whole lot of paper. And there's a lot of people that own a little bit of both, and so everybody's got their avenue. What I love about a note is I feel like I have very defined liability. For instance, if I'm a landlord, the toilet quits working or any kind of problem with the house, that ultimately becomes my problem. When I own the mortgage paper, I mean, all you got to do is think about this. When your carpets needed changed out or your toilet quit working, you didn't call Chase.
I tried, but they didn't answer.
Yeah, I'll get off the topic of that bank or any of the others, but you get the idea. So I look at it as, yes, there's liabilities with any investment, but I can very clearly see and predict my numbers on the upside. I can very clearly predict my numbers to the downside. I can predetermine what room I have in a note if things go bad. In other words, if I'm in that note and I feel like I've got $20,000 worth of room and I know that worst case foreclosure could take me a year and $5,000, then I pretty well know where I'm at in that note. And so I look at a very protected downside. And then when I compare that to other things I've done, stocks, options, commodities, it's not quite the case. So it's for me, I look at it as a very, very secure instrument. But with anything, you can lose your butt, right? We all know that. So,
do you buy these notes at what I'll call par value, the amount that was loaned, or are we getting a big discount? Or tell us how we make money. I don't want to make 3% on my.
Let's get to the chase.
All
right.
Yeah.
Well, just as a house is not a house and a building is not a building, a note is not a note. The thing about notes is you can pay par. You can pay over par, and you can pay under par.
Define par.
If the outstanding if the outstanding balance on this loan is $100,000, you can pay $100,000. You could pay 105 or 6. I've seen some up that high, or you could pay 60, 70, 80,000 for that.
Now, why would somebody pay over?
It might be considered to be an incredibly securitized loan. It might have 50% equity. It might just be the borrower from, wherever, that's 800 plus credit scores and all this kind of stuff, very secure. But if you think about that in today's environment, they probably got their loan, especially if they got it a year or so ago, they probably got it at 3.5, 3.6. So if you're happy with 3.6, well, I'm talking 3.6%. For the real estate community, that doesn't sound like much, but if you've got money laying in a checking account, well, that's 0.01. So it's all relative, right? What I have found is I like a space where I can get, I basically hold notes where I make 8 to 10% on a regular basis off the payment. And then there's opportunity because I've bought mine at a discount. So what makes a difference is if you can follow this scenario. You can research any kind of note that you actually want to buy. The space I like, for me personally, is somebody that paid for quite a while, maybe 3, 4, 5 years, had a problem. Could be a divorce, could be medical issue, could be anything. Good people that have a problem. Happens all the time. Somebody, a hedge fund came along, bought that note and modified it maybe a year or two ago, or 3 or 4 or 5. That note sells at a discount. It's somewhat damaged goods, but I like the story. So for me, that risk is worth it, because instead of 3%, I'm looking at maybe an 8, maybe even 10, certainly 7% return on that note just holding it. And I bought it at a discount. So if I bought that note for $80,000, going back to 100,000 outstanding balance, if their outstanding balance was 100, the house was probably worth 110 or something when they bought it. If it was a few years ago, maybe it's gone up, and I'm in there at 80. If that loan pays off, if they move or whatever, I will get the unpaid balance. So I'm collecting a nice return. I'm happy with the return. They don't have to move. It makes no difference to me. If they do move, that's a nice yield, whether it happens in 6 months, a year, or 5 years. And that's how I approach them. But there's an infinite number of strategies with notes. So,
Gotcha. So you can make a percentage in the middle and on your interest, and then you have some equity kind of built in on the end. Cool. Yep. Before we go to the next section of the show and we take a break, how do people find notes? How do they buy them? Where do they shop?
There's actually getting to be some exchanges. FCI Exchange is one of them. I spent a great deal of time, about 12 years, researching this space and being more confused than anything. If you try to Google performing notes, what you'll get is a pile of non-performing information, because this space is lightly traveled. When I say that, when you talk about buying a flip, there's a ton of people and very few properties. In this space, there's a ton of notes and very few people. That's a great dynamic if you understand economics, right? Mm-hmm. So right off the get-go, I like that. And then of the people that go into the note space, the vast majority go into non-performing. Okay, it's still fine because there's just so many of them. It's there's plenty of room, but we've got even less people chasing larger numbers of notes that are performing. Most notes are performing notes as compared to non-performing. So I like that aspect of it. Did I lose the question?
Well, is there a couple of websites that you can go to?
Oh, I'm sorry. So you can find notes sometimes in Craigslist. You can find notes sometimes at CIREIA. People have done land contracts. I personally don't touch land contracts. I like a note and mortgage or a deed of trust. So what I have found for me, I personally don't go to any of those platforms for the most part. I'll look, but usually I'm buying my notes directly from hedge funds. That's a hard relationship to establish, but at my other company, GML Capital Group, that's what we do, is we try to find those types of mortgages for people that are interested in buying them. The note that I just described is very difficult to find on an open platform.
Gotcha. Guys, we are talking to Greg Peterson about mortgage notes, and we're going to take a quick break, and we're going to finish up talking about notes, and we're going to be talking about the Perfect Launch Mentoring Program that Greg and Dave are doing together. And welcome back to Real Talk, Real Estate Investing the Right Way. I am Brett Snodgrass, and I'm one of the affiliate partners with Central Indiana Real Estate Investors Association. And today, we're talking to Greg Peterson, mortgage notes investor, private lender, and co-owner of Perfect Launch Mentoring, as well as Dave Short, one of the most sought-after rehabbers in Central Indiana. So, Greg, we finished the segment of talking about notes. And sometimes when you talk about finance or escrow or money and notes and mortgages, your eyes kind of glaze over. So can you kind of put this in a simple form for our audience and talk about notes and private lending and who would be interested in that and how does all that tie together?
Sure. Well, in the note space that I do with GML Capital Group, that has to do with notes that have already been originated. People living in the home, it's not really a flip, and it has to do with their pay history. So we're looking back over history and deciding if it's a pretty good long-term investment for us. In the lending part, that all has to do with flipping, pretty much right here in Indianapolis. And so that is actually originating this type of paper, a full mortgage and a note to back it up, lending for a 3-month, 6-month, 9-month, 1-year period. So I lend out funds for that type of thing. And then I combine with Dave, because Dave is, the most sought after rehabber in the area.
Yes, he is.
So that just makes sense for me. And so the more that Dave and I have worked together, the more we realized, there's probably something that's needed for people that are new to this space. And from my standpoint, it was being asked the wrong questions when it came time to asking for funds to do a flip. And so as part of the Perfect Launch mentoring, we try to cover the general idea of what you need to have in your portfolio, so to speak, to approach a private lender right and build a relationship, because that really is what it is. It should be a long-term, finish this house, get another loan from that person, and keep on going. It's some of the hardest money to acquire to begin with, and probably the easiest money to repeat with, because it's a personal relationship. So.
That's awesome. Dave, I want to ask you a question. So you are the most sought after rehabber in Central Indiana. So you're the expert.
I hear that all the time, but I'm not sure that's...
It is so true.
There's a line of people here waiting for his autograph.
That's right. So talk to our audience a little bit about what you do. What does that even mean, one of the most sought after rehabbers, and tie that in with private lending with Greg. How has private lending helped you in your business?
Okay, I do most of my borrowing from private type people, private lenders who want to lend money to make a return on their investment. That's above market rates. So, CDs today are, the investors are getting 1-2%, if that. And private money, we can afford to pay a little bit higher rate, quite a bit higher rate. And we go to people that like the space and like the security that comes with what we do. Taking that a step further, Greg and I created a company called Perfect Launch Mentoring, and what we do is have a program to teach people what I do, and it's very extensive. Flipping is not like the TV shows. It's really hard business to do. It's a fun business. It's a rewarding business. My wife are in it together. We both love it, so we get enthused about the flipping business. But I get a lot of people coming to me and say, look, I want to be a flipper. And I get emails, I get questions where people ask me generalized questions that took me 15 years to develop, and they expect me to, or would like for me to answer that over coffee. How do I find a flip? Well, that's really hard. It's really hard to find a product or a house that's appropriate. So Greg and I got together and developed this class. It's a 2-day class. When I tell people what the cost of it is, it seems high, but everybody that's taken our class feels it's a bargain. Like our class, which the next class is going to be June the 2nd, June the 3rd. It's $1,295 for 2 full extensive days, and it's A to Z on flipping. So we do this class, and we cover all the aspects that we can cover in the 2 days to let somebody know it. Number one, if they want to be a flipper. You see the seminars on TV from the people that created Flip and Flop, from Fortune Builders, who did the Flip This House shows. And they're basically bringing you in for a 2-hour free seminar to sell you a more extensive training program on how to flip houses. So it becomes, they give you something for free, and then they give you a weekend, 4 hours a day for $1,500 to $2,000. And people are lined up to go to this class. And the next step is they sell you a program for $40,000. I mean, we've had a bunch of people come to our class, some of the students, and basically said, I just paid $40,000 with Fortune Builders, and it's a good program. I've seen it. Is it worth $40,000? Not to me, but somebody else. It makes you committed if you pay that kind of money. But we've had people that's been through our Fortune Builders two-day training, and they said, man, I wished I would have came here instead of Fortune Builders because it's appropriate for our community. I mean, they're seeing real-life projects that's going on in Indianapolis today yesterday and before and after pictures. So I know that's a long answer to a short question, but it tells you some of the things that we do. And the private money is a huge part of that.
Yeah, I mean, in our business, people want to do flips, but then their answer always is, I don't have any money. So is that kind of how you guys got linked up? Because Dave was hearing all these questions about people not having money, and Greg knew how to get the money?
Well, we were doing some business together, and just both members of CIREIA, which I'd highly recommend anybody that's in this area that's going to be even halfway serious about real estate should be a member of that. You go to the meetings, but it's more the people you meet in those meetings, and those relationships are huge. But through all that, I saw a need. Vicki definitely saw a need. Dave saw a need. And we just kind of put our heads together and thought, gosh, if this exists, maybe we should do this. And I think Dave and I both kind of wasn't our first line of thought to do. We're kind of busy with other things, but it was very encouraging to put the class on and see the response. We tried to limit it. It grew a little bit bigger than what we wanted the first time, but the response from everybody was fantastic. One part that Dave didn't check on is, we try to be very upfront, and he was about this, very upfront about what we charge. We're not teachers. We do what we do on a regular basis. As a side, we put on this class. I mean, that's just being blatantly honest. It's not a polished, refined whatever. It's the facts. It's what you need, and so on. Along those lines, we don't bring you in and then, oh, by the way, we have a $500 tape for you to buy, or this or that or that. So in full disclosure, what we do in this class is you can learn a lot in those 2 days. I believe in any of these classes that you go to, you can learn a lot. But the problem becomes applying it, actually doing something with it. So we tell everybody up front, once you've been through the class, we will give you an opportunity to put $20,000 into a project. You don't have to do it, and I don't want to tell them that in the class. I want people to know it when they're signing up. If you feel like, wow, after these 2 days, I really want to move forward, we believe you need to have your own funds to do any kind of flipping. You need to have some skin in the game, as they say. So the $20,000 shows you do have funds that you could use. We combine those funds. We do a flip. This is after the 2 days. So for the next 3-6 months, whatever, we are purchasing the house, running the students through the house on a regular basis, asking questions, getting input, and so on and so forth. They are applying this. When we are done with that house, we sell that house off and they get their $20,000 back. So now they have $20,000 available. They have great knowledge. They've met incredible contractors. They've got, there's nothing that takes the place of years and years of experience. But if you have no experience, how can you get good quality knowledge and contacts as fast as possible? We don't think there's a better program. I really don't. I think our $12.95 is an absolute steal. And if you put it into terms of other things, it absolutely is. And then, like I said, this allows them to have a flow of how this works. That 20 is tied up until that project's over. Here's your 20 back. If you don't ever want to do a flip, you learned a lot. If you're getting it and you're ready to move forward, you now have funds that you can then go to a private lender and match up funds with. So
that's awesome, guys. Thanks for sharing the information. So this is a 2-day class on June 2nd and June the 3rd. You pay $12.95 to get into the class, and then you talked about a $20,000 they put into a project. Like that's
optional,
not an educational thing. That is something that they actually put into a project, and they get that back after the flip, right?
Yep.
So the big question is, you got 2 days. 2 days and Dave, you said it took you 15 years to answer some of the questions. So what do people learn, and how much can they learn in literally 2 days of education in real estate?
Well, we can give them enough knowledge to get their feet wet, to understand the good part of flipping, the poor part of flipping, the mistakes that you can make. We also have a class covering private financing, on how do you get the money and create a platform so you can go out and try to find money if you find the flip. The other thing that Greg didn't touch on is that we really take the coaching very seriously. And we're there for the flippers, if they want to become a flipper, to help them pass on projects, to accept projects where we respond to them on a very timely basis. And, we've got one of our students right now who's in the process of a $300,000 flip. And he took one of the ideas that we give him in the class in regards to delinquent taxes and made the calls and found a house that he bought for $140,000. He's putting $50,000 in it. I've been through the house a couple times with him to make sure he's not making mistakes. He's used 3/4 of our contractors to get the house done. And I said, Darren's named Darren Finney. I said, don't underprice this house. Give it a chance to perform. So he's going to put it on the market at $299,000, and I'm guessing that house will sell in less than a week because of the quality of work that he did.
And Dave, what do we charge for that consulting?
That was a freebie, but it's part of what we do.
Yeah.
I mean, we want you in 2 days. We're not going to make you the world's most renowned flipper. Nobody is. No class is. What we're trying to do is give an incredible foundation. We've had a couple of students that have sincerely come up to me afterwards and said, that was a fantastic class. I don't want to flip. I get it. It's not as sexy as it appeared on TV, but I'm interested in some other aspect of real estate. That alone, they felt it was well worth it for that. But then most all of them have gone out trying to pursue other projects, and then our phones are open. I mean, we try to help as much as we can and help them be successful in that next project. So.
Awesome, guys. Well, thank you for being an open book. And we're going to take a quick break. But when we get back, we have Dave Short and Greg Peterson, where we're talking about perfect launch mentoring and how amazing it is. And welcome back to Real Talk, Real Estate Investing the Right Way. I am Brett Snodgrass with SimpleWholesaling.com, and I'm one of the affiliate partners with Central Indiana Real Estate Investors Association. And today, we're talking to Greg Peterson, who is a mortgage notes investor, private lender, and co-owner of Perfect Launch Mentoring, and one of his partners, Dave Short, who is one of the most sought-after rehabbers in Central Indiana, who is also the co-owner of Perfect Launch Mentoring. And we're talking about your guys' mentoring program. And the first question I really want to dig into is, in all of your experience, Dave, I know you have so many years. Greg, you talked about many years in the notes industry and investing in general. Why does someone need education? Why does someone need a coach or a mentor, in your guys' opinion?
Well, everybody needs a coach in some form of their life, and especially in real estate, because it's such a large learning curve to learn to do what we do. So coaching is part of it. Perfect Launch Mentoring is part of the coaching. It gets you committed, even though it appears to be expensive at $1,295. It's really a bargain. Something that we do for our coaching that is invaluable is some of the workbook and materials that we get in the class. And it lets you recap everything that we talk about in a day-to-day class. One of the workbooks that we have and we give to the students is called a scope of work workbook. So a person can go into a house and see everything listed that could be wrong with that house, and it gives you approximate cost on what it's going to cost to do that. So in a very short period of time, I'm going to say an hour, you can go through a house and figure out, hey, this house is probably going to cost me $30,000 to rehab, and I have to pay $90,000, and it's only worth $110,000 when I get done. So is that going to be a sought-after flip? Probably not. But you don't have to spend 2 days deciding that it's not a good flip. So.
Awesome. How about you, Greg? What's your opinion on why does someone need to go to this 2-day seminar or need a coach in general?
Well, I'll tell you what. I operated a fire and water damage restoration business for 20 years, and for years I thought I did pretty good and trotted along, and I went to a whole new level when I paid a ridiculous amount of money for an ongoing coach. He showed up once a month. I got a ton out of it. He got a ton out of it, that's for certain. But my business went to a whole new level. Sometimes when we run our own show, everybody thinks they want to be an entrepreneur, and it is great. I've been that way my whole life. But we don't have a boss. And when you don't have a boss, you lose direction. Hiring a coach, if for no other reason, gives you your self-imposed boss, for lack of a better term. You set goals, you achieve things. Or in our case with Perfect Launch, our coaching is ongoing support. So you're looking at a house and you're freezing up and you're not sure what you're supposed to do, or is this a good deal or whatever. We want to step in after you've been through this class and taken some time to learn some things and help, and give that little bit of guidance and push if it is, and get them through the first deal. So
Definitely. I want to, there's a lot of mentoring programs out there, a lot of educational programs. We've talked about some of them, and they're asking for thousands of dollars, $30,000, $40,000 to get this package of for someone to be a successful real estate investor. So this is $1,295. That's not that much money for me because I've been to those other seminars and I pay a lot of money for my coach, and so it's a return on investment. But how is your program a little bit different than some of these other ones? Dave, you talked about the workbook, and then Greg, you talked about going into the field. What exactly does that look like, and is that what's different? But what makes your guys' different than the other ones?
Well, in the field is really important, and when you get into the field with us, which is step 2 of our program, then the people get to look at the house before we start construction on it. They potentially get to help us select the house. They get in our minds, Greg and I's minds, of why we picked this house and what our initial cost we feel is going to be in that house. So they get to meet contractors. They get to interact with contractors to see what their mentality is, because contractors are their own breed. You get to see the daily and the weekly and the monthly progress on the house and the changes that are being made, and then they get to see why we picked this cabinet versus that cabinet, why we went granite countertops, why we went quartz countertops. So the decisions are immense. There's a lot of them on every flip house that we do.
I love that. It's almost the philosophy of put your money where your mouth is, because a lot of people that put on these educational programs, they say a lot of things, but you guys are literally backing it up with going out into the field and putting your experience together, and that's amazing.
Well, one of the things, just not interrupting you, is sometimes the mistakes that are made with houses. We get in there and we're up front with the students. The first house that we did, we got in there and I just said, God, I just blew it on this basement. So here's how we correct it, and here's how we would try to recover the cost to get our in-sale price in the specific house.
And awesome. I think what we're trying to show in this program too is, if you buy right, you aren't sure what your profit's going to be when it's over. Dave's been doing this forever. You don't know the exact number, but if you buy right, you can have room to fix the things that seriously need to be fixed. On this particular project, I suppose you could have done some patch jobs or something, but we found out it needed a full perimeter drain. That's not fun to find out when you weren't anticipating that on the front end. We bought the house right enough that even though I whined a little bit about what the actual profit was, there was a profit. And in this business, you have got to shoot for nice returns, but leave yourself enough room. Take care of the house right. You want to put somebody in a good, solid product when it's all said and done. And if you make a little less to do that, that's great. I mean, it's just part of it. If you proceed that way, you will hit grand slam home runs where you make a nice profit and you're putting them into a nice product. You just don't know which one that's going to be. So, we try to show that in this class too. It's not all roses. It's hard work. It's a real business. And we want people that are going into this business to understand that and do it right.
Definitely. So, Greg, we started the show off talking about notes and private lending, and we've talked a lot about rehabbing. You're teaching people how to rehab houses. You're taking them into the field. You show them which cabinets to pick out. But again, the question always comes back to, after this program, after they've done this deal with you, they have to go out and do it on their own and find the money. Do you show that in your program?
Absolutely. Yeah. I'm a fairly blunt, I guess, individual, for lack of a better way of putting it. There are people out there that'll claim you can do these things with zero money of your own. I don't believe in that philosophy. I believe that one way or another you need some seed money. The exact amount depends on the project, but you need something, and you need knowledge. So I guess what I would say is you need to apply those things. And then, Jeff Gordon, I think their team years ago had the refuse to lose. If you apply refuse to lose in real estate, there are exits. You can rent the house for a while to make back some of your money. Whatever. One way or another, you can refuse to lose on that house. And if you refuse to lose, worst case scenario, you'll make a tiny amount of money and you will gain a ton of knowledge and you'll move on to the next project and be smarter. And that's life, right? When you're new at something, you gotta be willing to jump in and do it, but with some coaching and with an attitude that says, no, I've got enough knowledge now, because you'll never know it all. You know more as you do projects, but you refuse to lose, and you just keep proceeding forward. And I think that's probably the best thing I can say.
Love that philosophy. Love that. Guys, we're talking to Greg Peterson and Dave Short about their Perfect Launch Mentoring Program, and we're going to take a quick break, but when we get back, we're going to put Greg on the hot seat, and we're going to put Dave on the hot seat. And one of the biggest questions we really want to know is, what are the most important factors one has to have to be a successful real estate investor? We'll be back in a few. Welcome back to Real Talk, Real Estate Investing the Right Way. I am Brett Snodgrass with SimpleWholesaling.com, and I'm one of the affiliate partners with Central Indiana Real Estate Investors Association. And today we're talking to Greg Peterson, mortgage notes investor, private lender, and co-owner of Perfect Launch Mentoring, as well as Dave Short, one of the most sought-after rehabbers in Central Indiana. And we're talking about your guys' mentoring educational program. We've talked about why it's important to have a mentor and a coach, what you guys do in that 2-day seminar, going out into the field, getting the experience. But after it's all said and done, what are the key characteristics and factors that it takes for someone to be a successful real estate investor, in your opinion?
Well, Greg touched on it a little bit earlier in the show. It's perseverance. You've got to love our business. It can't be a job. And unless you're focused and really want to be in this real estate business, then it's not a job for you. It's fun. And you need to pick the area that you wanted to be in the business, in the real estate. My thing, I've been in the brokerage business for 45 years, and every 4 or 5 years, it seemed like I reinvented myself, because you tended to get burnt out. And you can get burnt out in this business. So we want to help you refocus. We want to help you get into an area of real estate that you like. The class definitely touches on all aspects of it, and you can't do it all. It's like Gary Keller's book, The One Thing. Figure out the one thing and do it really well.
Definitely. I understand you can get burnt out when it becomes not fun and a job. That's when you can do something else. And that's what I love about real estate, because there's so many different things: private lending, rehabbing, wholesaling. But what about you, Greg? What are some characteristics that you think that someone needs to have to really strive and be successful in his business?
I would say one of the things they need to do is meet people and sort through those people and find like-minded individuals, such as at the association at CIREIA. But you need to get yourself around the individuals that are doing what you want to do. And I think a lot of people are uncomfortable with that. I know throughout my life, I just got to knowing people that were at a place where I wanted to be, and then they share. I mean, people that have been successful want other people to be successful. I truly believe that, because we know how much more fulfilled you are in life. So I think a huge part of this is getting into these groups and meeting people and sharing stories and finding out the good, bad, and the ugly, and then go do it. I mean, that's the other part of it, because there's a lot of people that are just, 5 years after looking into real estate, they still haven't done anything. Well, maybe it's the wrong thing for you, but if you're waiting till you have all the answers, you won't have all the answers. I've been doing this forever. I don't have all the answers yet. But each time I do something, I swear every time I learn something new. I mean, that's what it is, and you become more developed. And I think that's true whatever field you're in. So, that's what I would say. Get out, meet the right people, and pull the trigger. Do something.
That should be the tip of the week.
Well said. Well said, Greg and Dave. So I'm really going to put you guys on the hot seat. Super excited about this. And I think that one of the things that you do differently in your mentoring program is you actually take people out into the field and you do a project. You see a lot of guys come in and they talk a lot, but they don't do anything after that. So talk about these projects that you've been doing, the good, the bad, the ugly. What's this all look like?
Well, as part of the first class, we did three three projects. And just roughly recapping the numbers, the first one we paid $50,000 for. We put almost $47,000 in that house. We thought the house would sell for about $124,000, $125,000. We sold it first day on the market for $135,000.
Awesome.
So, after selling costs, that house brought in about $18,000, which was a fair profit for a house in the $135,000 range. And we tell our students, if you have an investor partner, then you would have each made $9,000 in 90 days with $100,000 invested in a total project, which is a tremendous return on investment. And we took a strategy there that was subbed out with individual people. House number 2, we brought in a general contractor that did all the work. We paid $57,000 for that house. We put $35,000 in that house, and we sold it for $119,000. Well, it was about a $13,000 or $14,000 range. It showed our students that if you hire one person to do the job, you're going to give him a certain percentage of your profit to do that job, but you can be less hands-on in doing that project. So it was another avenue. Then the third house we bought, we thought was going to be our best profit house. We paid $29,000 for that house at a sheriff's sale. So they get in the dynamics of buying at a foreclosure sale. And, we had everything that could go wrong with a flip house go wrong with this house. But you don't lose sight of the prize at the end, which is to sell the house for a profit. So we had to dig in more with that house and look at every aspect of it and figured, okay, this is a problem. How do we solve it? Well, we got out of that house again. We thought we was going to sell that house for $74,900. We ended up selling it again first week on the market for $85,000. But because our costs were so extensive, we had projected with estimates that the bath in this basement that we were going to put in was going to be about $4,200. That bath was $12,800 because of the extensiveness of the plumbing that we had to do. Just totally, it wasn't overlooked. We knew it was going to be a lot of money, but it just was so more extensive than we thought. So that house, we only made $8,000 on that house for our group. Now, having said that, $8,000 in 90 days on a $62,000 investment, if you annualize that out for the year, that's a 15 to 18% return on the money. And we felt that was a disappointment, but it was still a win. Mm-hmm. And it was really a win for the investors that did that was in it and say, okay, this was just everything went wrong, but we stuck with it and made the corrections necessary to get the house sold at a fair market rate.
Love it. Love that you guys are so real, so transparent, and just talking the real numbers really just paints a great picture for investors of what they can get into. It could be a great day, and you can definitely have challenges, but as long as you win in the end, that's what it's all about. So we're running short on time, guys, but thank you so much for joining us on the show today. But I really want to hit home with this perfect launch mentoring program. So if someone out there is listening right now and they want some information on this, where is the best place for them to go?
I think there's several places. They can reach out to my email, Greg at perfectlaunchmentoring.com. They can always get a hold of CIREIA. We're on their website, and Vicky just loves to field questions over there. So, call. And Dave, you can reach Dave
at dshort at C21sheets, SCHEETZ.com. And we'll even field a call on the phone, 317-590-4499.
There you go.
Awesome. And you guys have a couple of other subgroups that you run for CIREIA. Greg, what's yours?
I do one called Notes. It's at the Clauda Irish Pub on 96th Street. I like to think it's like back to college. We mix finance with liquor.
It should be a fun night.
Yeah, we try. We have a lot of fun, and there's nothing sold there. We just, we present different things about notes, both performing and non-performing, and there are people in there that have notes, and so they talk sometimes about theirs. So we have different agendas each time, but it's from 6 to 7:30, third Monday of the month. Love to have anybody out there that wants to show up. You're more than welcome.
Great. Dave, when's yours?
Mine is the third Thursday of every month, and it's at my real estate office, which is 4929 East 96th Street. And we run from 6 to 7:30 is the published time, but I seem to never get out there before 8 or 8:30. So.
Great. Well, check those subgroups out, guys, and make sure you check out the Perfect Launch Mentoring Program. I can't say enough about Greg and Dave, your honesty, your integrity, and I know that I would love to join one of those groups. So, and this week at CIREIA, we have some subgroup meetings, including how to set up your real estate business, landlording, and investing on the South Side. And if you want to find out what's happening in other parts of Indiana as well, and learn about different investing strategies, you need to go and attend the May 19th and 20th Indiana State REIA Conference. Find out more about our group and these events by going to www.cireia.org. That is CIREIA.org. Thanks, Greg and Dave, for being on the show. Wish you guys the best.
Thanks for having us.
Thank you.